Hello guys, welcome back to the YouTube channel. In this video I'm going to talk about how you can know when to trade the London session. Okay, so we're in the summer and usually it's a seasonal tendency that uh, London price action is better than New York. Not necessarily better, but London price action is just better than what it usually is in the winter. Okay, so a lot of people in the server were talking about how you can trade the London session because obviously it's a great opportunity. I personally don't like to trade the London session because um, trading New York once you know what London did is much easier because you already know. So one of the two things can happen. So either London's gonna make some low resistance liquidity, which is a key target for New York, or it's going to tap into a PD array, and then you can trust the London high or low, and then take a continuation trade. Okay. Um. So what I'm about to talk in this video is not about a pattern or some kind of mathematical equation, because I say that because a lot of people in the server are talking about quants, and first off, they have absolutely no idea what quants do, and I actually know the head quant risk manager at a company called Agora Data. Okay, and I have had a few conversations with them, and trust me when I say this. When you guys talk about trading like a quant, you don't really know what you're talking about, and that's okay because let's be honest, that field is just way too gatekept. Okay, you ask 10 quant guys what they do, and they're gonna give you 10 different responses. Okay, anyways, but uh, this video I'm gonna give you something which is I'd say really, really, really unique, and not a lot of people actually talk about this or use it. Okay, so to understand when to trade the London session, you need to understand what the ICT opening range gap is. So the opening range gap is basically the difference in price when it closes at 16:14, which is 4:14 p.m. New York, and when it opens at 9:30 a.m. New York. So the difference uh, in price when it like closes and opens, that gap, there's a gap there usually, and that gap is called the opening range gap. Okay, there's five gaps I think. The new week opening gap, the new day opening gap, the opening range gap, the previous settlement gap, and actually the new day opening gap has two types. Um, and obviously most of you don't know about it because it's not been talked about a lot. But let's just focus on the opening range gap for this discussion. All right, so here I have marked the opening range gaps for 2 days. Okay, so how you want to use this is first off, you need the previous day opening range gap to trade to know if the long session is going to be good or bad. Okay, so for this example, you mark out the 16:14 close price previous day, and then the 9:30 opening price right there. And if you notice, when we are here, if you see that, what's that? That's equal lows in the previous day opening range gap. So let's say you're trading the next day, which starts at midnight, actually in the Asian session. So let's mark that out. Okay, so let's say you start trading around here. So how would you know that the London session is going to have volume? Now, first off, you have to drop any known conceptions. Okay, this stuff is not in a book. You can't you can't buy a book and read about it. Okay, it's not like that. Okay, because if it wasn't a book, then it would not work. Not that they would change it, but every time it forms, there's going to be so much manual intervention that you're not gonna be able to trade it. But right here, I'm gonna tell you when London session is going to have volume and when it's not going to have volume, which is absolutely nothing, which is absolutely something that nobody ever talks about. Okay, no, you can solve 20 nested integrals, but can you tell me when London session is going to have volume? Can you tell me when all these sellers or all the buyers in the world are going to come together in London session? And it usually consolidates. Okay, if you don't know about the London session, a lot of times it just sits around, sits and does nothing. But how would you know if it's going to do something? Well, this is one of the tools that I use to determine that. So first off, let's say I start trading here. So what I would do is I'd mark out the previous day opening range gap, which is that line there and this line here. So this entire range is the opening range gap for the day of 19th May 2025. And here's 20th May. Okay, so what do you want to look for is some kind of relative equal lows or relative equal highs inside the previous opening range gap. So in this case, we had a we're coming to the opening range gap from the upside. So we would look for relative equal lows, which is right here. So let's mark that out. And if you notice, this right here is London pre-market. It's 1 a.m. Trades into premium, I assume. Not exactly in premium, but in like a premium array. So you don't need price to trade into premium. You just needed to trade into a premium array, which I think there's a 15-minute or a 1 hour Vervey gap right here. Okay, so that happens, and then we bang around because it's bad price action, and boom, right there, we purge the equal lows that formed, in the previous day opening range gap. Okay, so this move right here, that's a big move. That is not usually what happens in London. I can show you what happens in London. Usually, this is what happens. It just sits around and it does absolutely nothing. Okay, and I'm literally telling you when you can expect London session to move. Okay, and you can't find this stuff in a book. Okay, because it's just not there. Okay, it's just not there. Guess what? What day is today? Today is the 22nd of May. If you find me a book that is printed before 22nd May, I will quit trading. If you find me a book that talks about this very concept, you can find how to solve 80 math equations for free. That's out there for free. But if it's so easy, it's just marking out 2 times and then you're looking for relative equal lows, relative equal highs inside of that range. But if it's so damn simple and it's so damn good, why is nobody talking about it? Because if they talk about it, like I said, it would stop working. And I'm not afraid of that. But even if they patch this, so uh, I don't care because I have a, a lot of tools. Okay, I can do this stuff for a lot of different times of the day. Okay, and they can they okay. Let's touch on the little bit on the algorithm part. So a lot of you think that the algorithm can be just changed. Okay, it's not your VS Code that you can open and you can change code and you can close it back, hitting Control S, or it auto saves if you just close it. It does not work like that. Okay, if you uh, could you imagine the amount of money, time, and effort they put into placing this algorithm in all these instruments, and you think they can just change it because I made a video about it? Absolutely not. Okay, absolutely not. This algorithm, well, tell you what, since the start of trading, since the very start of trading, people think that there's something called support and resistance. And you can make a guy wear masks for 2 years, okay? But how do you stop a guy from putting a stop loss below 2 lows? How do you stop that? The answer is no, you cannot stop it. You just can't. Because it's psychological. You can't change a person so very much. Because the very idea of the stock market or any market uh, for the example, You would believe that, well, it's obviously buying and selling pressure and it's a free market. Well, I'm sorry to burst your bubble, but this is not a free market. It's just heavily manipulated, and that's a good thing. That's a really good thing. It's manipulated, so it's not about probabilities. It's more about being right. And yes, I believe I can. You can have a 100% win rate in this market. I truly believe that, and I actually have models that I've put on the Discord server for free that have more than 95% win rate in the last 3 months, I think. And it's literally all there. You can go check out, look it out. But all I'm saying is, this stuff they won't teach you this stuff. No, nobody's gonna teach you this stuff. Okay, nobody's gonna talk to you about it. Nobody's gonna tell you about it. Anyways, coming back. So right here we have the opening range gap for 14th of May, and what do we have here? Relative equal lows. Well, coming back to the next day, which is right about here. Okay, so this they actually call it out right here that it's gonna go purge those lows. Some guy was asking for a signal. Well, I literally told you where the average of the top 100 U.S. stocks is gonna go for the London session. Okay, and it's just it's a superpower. Okay, you believe it or not, I don't care first off, I don't care if you believe me or not. I just do this because I find it really fun and I like to share a lot of what I know. As you all know that I really like to share what I know. But obviously, I talked about having the Enigma, and it's not the Enigma per se, but it's so damn good that it's just too good. And I don't use it, but I don't think I should be talking about it at all. Okay, but very few people in the server actually know what I'm talking about. To you, it might sound gibberish because you might not be in the server or you just don't know that I ever said that. But point is, stuff like this, it's just not there anywhere. Okay, you would expect that quants and data scientists, all these people, they would know this if it existed. They would know this. Well, maybe they do know it, but if they know it, then why is it not in a book? Why is there no publication in the history of human kind, in the history of mankind, that never talks about this? If it's so damn easy and so damn simple, and look at this. This is the learning session for this day. See that clean run, purging those outside. Well, it run there. Well, look here. What's here? Relative equal lows. That is not the end all beat all because you can't just learn one thing and be like, yeah, I know how the markets move. No, that's one part of probably hundreds of things. Okay, this is one tool out of many, many tools I can use to tell you where price is going to go. Okay? And if you can't do it, then you just have to live with it. Okay, try not to be jealous because there have been people who've been jealous about this. And obviously, I don't care about any of those people. And I'm not going to waste time thinking about them or trying to cater to their interests. Okay, but I want you to look at these equal lows right here that got purged in the London session this day. Okay, you can saw, also there's this usual persona about the quant traders or traders that use kind of like computerized models that they're the topmost form of traders. Well, nope, they're not. They're absolutely not because tell you what, you can solve 80 nested integrals. Okay, you can solve 80 integrals with 80 different variables in 20 minutes. Maybe that's your superpower. But can you tell me when London session is going to have volume? Because what I'm telling you right here, it really, really, really violates the free market idea. Okay, it really violates it. I'm telling you in a YouTube video that this market is not a free market, and I'm giving you the tools to do this. And this is just one tool out of the many tools that I talk about. And this one, this really very specific one, is something I find really high probability, and something that's really easy for beginners to look at and learn from. Okay, and enough rant for this video. I'll see you in the next one. Thank you for watching.